Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today we're going to check out this article together that everyone keeps messaging me about, that's making the rounds in our private Discord group, our Facebook group. Everyone wants my thoughts, my comments on this. This is a very, very interesting article here from the Globe and Mail. I'll put the link in the video description below if you want to read it. But let's go through it together, guys, because I think we could learn some very important lessons from Mr. Marcus, who is a retired military member that built up, get this, an $883,000 TFSA that generates $11,000 a month in tax-free income. Absolutely incredible. Of course, anything in the TFSA that's generated is tax-free. So how the heck did this guy get his TFSA up to almost $1 million? Let's go through the story, guys. So this is an article that's going to be, I guess, part of a series called the TFSA Trouncers, a new series that profiles Canadian investors who've accomplished incredible feats with their tax-free savings account. I have to admit, this is a very nice series idea. I doubt they'll get many submissions, but I'm sure there's some similar stories out here because it's definitely not the norm. So they even say if you have a TFSA of over $500,000, drop us an email. So let's go through the story, guys. So Marcus, 67, now retired from the military, opened a tax-free savings account as soon as the investment vehicle was created in 2009. I already like this guy. He opened it right away. TFSA, very, very important. So we'll go through the article, and then at the end of the video, guys, I'll try to analyze 5 to 7 lessons that we could all use from this guy's example. So let's continue. After a few years of having the funds invested in a simple, low-paying savings account on the advice of his local bank branch, absolutely disgusting. I was disgusted when I read this. I can't believe anyone who uses the TFSA for a low-interest savings account, a savings account, is absolutely nuts. I mean, I can't believe this is what the bank, well, actually, I'm not really surprised what the bank suggested for them to do because, the savings account is probably with them, right? So I love that, like it continues here. He took matters into his own hands, first using a dividend strategy, then redeploying the funds into a growth stock. So today his TFSA is worth $883,000 and he's generating $11,000 a month in income, all tax-free because it's the TFSA. So how the heck did he do this? Well, his success is far from the norm, that's for sure. The average TFSA account in 2023 is $41,510, less than half of what Canadians can now put in. If you have the age limit, it's 95,000. So luck played a big role for Marcus, and those hoping to replicate his success won't find it easy. I have to agree with that. A Canadian opening up a new TFSA today was never contributed. You'll have a maximum of $95,000 to invest with, right? As we know, the amounts keep going up every single year. But it illustrates how making the right call in a stock or fund, or several of them, can lead to mind-boggling investment balances that will never attract the tax man, of course, because it's tax-free all the time, all the while reshaping one's retirement and estate planning. So for Marcus, the road to TFSA riches began in 2017 when he sold dividend stocks that he purchased while following the Beat the TSX strategy, which is based on choosing the 10 highest yielding stocks in the TSX 60. So I'm sure you have things like Royal Bank, TD Bank, Enbridge, things like that. He poured much of the proceeds, so he sold those and he put all the proceeds or most of it into Shopify stock, which at the time was trading at close to $6. And then he sold most of these shares in 2021 when it was trading near $160. So if we look at the graph of Shopify, which is pretty much the best and biggest well-known technology company in Canada, which absolutely exploded during COVID, like a lot of technology, especially e-commerce platforms. So he bought it over here 2017, where the price was $5, $6, $7, $8, $9. So it says he bought it at $6, and then he sold it in 2021. If we look in 2021, the stock price is hovering between 150 all the way to 180, 187. I think the record was 213 in November of 2021, and we all know that after starting about December 2021, that's when everything started going downhill. So he literally got fantastic, perfect timing. This is why they say it was luck. So absolutely fantastic here. At the time, and this is his quote here, at the time I was employed with the military, I had a full-time job, I knew I had defined benefits, pensions coming to me, so I decided to take a chance with a growth stock. So it's pure luck. He says it's pure luck when I sold when I did. So I have to agree with him. This is definitely not the norm, guys. You have to remember that when you're dealing with a highly speculative growth stock, not only do you have to buy it at the right time, you have to sell it at the right time. That's even the hardest part, because selling something that's going up and up and up is very difficult psychologically. But this guy knew exactly what he did. He got lucky. I have to admit, he got lucky with that. Part of this decision to sell Shopify was because his wife had plans to retire 2 years before her pension kicked in. The couple wanted to replace some of that lost income in the interim. I like that. There's a plan. Here's another great quote that I love from this guy. I'm starting to love this guy more and more. We had a fairly detailed budget, so I knew exactly how much money we needed. Essentially, I needed about $45K a year in dividend income for her to take her retirement. It kind of reminds me of a little bit of my story, where Erica retired first and we had to figure out exactly how much we needed to become financially free. But what I like about what this guy is saying is he had a fairly detailed budget. This is very important, guys. You need to know what's going in and what's going out. What are your expenses? You need that file, right? The income and expenses file, or budget, if you will. So he figured he would reinvest some of the Shopify proceeds into dividend-paying ETFs, which would generate at least that amount every year in tax-free income. And here we go. Check this out, guys. He took that strategy one step further. To maximize the TFSA income, he decided to invest heavily in covered call ETFs. He learned about using these products, which employ a strategy of selling call options on the underlying securities to generate high income, by watching YouTube videos. Can it be, guys? Can it be that he's watching my videos? I would love to know. And by the way, Marcus, if you're watching, please reach out to me. You could email me, investinpassiveincome@gmail.com, if ever you're interested to chat. I'm very, very curious, by the way. So reach out to me, my friend. I would love to do a testimonial video with you. You could remain anonymous if you want. We won't use your last name, but this is absolutely incredible, my friend. Congratulations for actually doing the research yourself, taking the matters into your own hands, doing it yourself, right? Can you imagine where you would have been if you just left it in those little cash savings account? Anyway, while this is something I really don't understand why they wrote this, while they entail higher risks, that's absolute nonsense. Covered call ETFs have lower risks, not higher risks. Maybe leveraged ones do have a little bit higher risk, but if you ask me, a leveraged covered call ETF is going to be relatively the same risk as an index fund, right? ETF with covered calls lowers the risk, but if you add a bit of leverage, you're raising it again, so it kind of nullifies that. While they entail higher risk, not true. He tries to minimize this by diversifying into several different covered call products, especially those with broad exposure to the S&P 500 and NASDAQ indexes. Overall, his current TFSA portfolio generates a yield of about 14%. So my guess, guys, for S&P 500, there's basically three of them. There's HYLD, there's USCL, which is literally the S&P 500, and there's Evolve's ESPX. For NASDAQ 100, there's only one. It's QQCC and QQCL. So my guess is that he's in some of these or a combination of these. My guess would be in the leverage ones. Maybe that's the part they left out in the article, that they said higher risk. It's possible. My guess would be these, because to get a 14% yield, you'll probably have to be in the higher yielding one, the leverage one, which is HYLD, USCL, QQCL. Those would be my guess. And you also got them lower than they are now, because now they're about 13.5% yield. So my guess is that these are the ones he bought. But again, we can only assume, right? But I'm pretty sure. So now he generates 134K or 11K a month tax-free income. In his TFSA, he keeps growth stocks in his RSP. And get this, he still has over 200,000 of unused contribution room in his TFSA, thanks to his decision to sell his Shopify stock, right? So remember, guys, whenever you withdraw anything from your TFSA, I believe in the beginning of the article, he said he did some renovations, he bought an RV. So anything you take out of your TFSA, you get that room back the following calendar year. That's what it says here. That's 100% accurate. So guys, I mean, he obviously got very lucky with Shopify stock. He 16x'd his money, 15x'd his money. I don't know, $6 to $160. That's way more than 10. I think that's about 25 times your money or something like that. And then if you take it out of your TFSA for whatever reason, the first step is you have to sell a Shopify stock at the right time. When you take that money out of your TFSA, you could put it back the following calendar year, which is absolutely amazing. So for the future, he plans to draw down funds from his registered retirement income fund, which is his RIF, and reduce the tax hit through income splitting with his wife. Then he'll put the funds into his TFSA. Obviously, got to remax it out, and that's what he says. What I'm trying to do is reduce that contribution room in the TFSA to zero. Guys, this goal, reducing the contribution room in your TFSA to zero, should be every Canadian's number one priority in terms of financial health. The TFSA is awesome. And then once that's done, I'll live strictly off those funds I get from my RIF and keep investing whatever is in the TFSA. So that's it. So this guy really has a plan. I love that. He knows what he's doing here. And this is pretty funny right at the end here. Marcus has made his investing mistakes over the years. Both he and his wife, for instance, bought cannabis stocks at one point that surged in value, yet they didn't sell. Now the shares they held on to eventually were worth very, very little. So this is, if you're taking that chance in your TFSA, guys, the opposite could also happen where you lose a bunch of room. If you invest in, for example, cannabis stocks, then we all know what happened. It happened to me as well. Luckily for me, I was in a net positive. I played around mostly with Canopy Growth. But the opposite could happen, right? If you get unlucky, you could also destroy your TFSA room as well. So, and then he goes on to say, more words of wisdom, guys. The buying is the easy part. It's arriving at a decision to sell at a certain point and carrying on with it. That's the hardest. So this is a problem that growth investors have. It's very easy to buy, but it's very hard to sell, especially when it's going up and up and up, especially single stocks, right? Because you think it's going to go up forever, and then what do you know? Bang, they go down. So very, very cool article here. I congratulate you, Marcus, if you're watching. Fantastic job. Reach out to me. I would love to do something with you. But now let's talk about what are some of the key lessons we could learn from Marcus, because I think that's very important. All right, guys. So what are the lessons we could learn from Marcus, who I commend and congratulate for his success and his intelligence, obviously, of having a plan? Well, the first thing, so lesson number one is quite obvious. The TFSA is amazing, right? This is the only way as a Canadian to get tax-free income besides criminal activity, guys, stealing cars and stuff like that, selling drugs, whatever. I mean, the TFSA is the only way you could get tax-free income. Everything else you do in Canada, everything is taxed. Everything. So the TFSA is awesome. It's definitely the best investment vehicle in Canada. It's the most important. Every Canadian should be maxing out their TFSAs as soon as possible. The TFSA is amazing. Yes, there's also that first home savings account, which works a lot the same way. There's actually two benefits. It has the benefits of the TFSA and the RSP. It's really, really good too. I have to commend the Liberals for inventing it, for coming up with it. If it was really them, whatever. But it's good also. But the TFSA, guys, it should be your number one priority. It's the best wealth building tool by far in Canada, guys. Okay. Second lesson from Mr. Marcus, do it yourself. Do it yourself. Manage your TFSA yourself. You could do it. It's not difficult at all. Do not trust your financial advisor at the local bank they told him to put it in a low interest savings account. That's absolutely disgusting. It makes me mad when I think that those bankers or those advisors are giving that nonsense advice just so they can make their commissions. Manage it yourself. There's no one you could trust more with your money than yourself. Right? So do it yourself, investing, guys, all the way. Whether you want to do income growth, dividend, doesn't matter. Do it yourself. Third lesson is just like Mr. Marcus, who opened his TFSA right away as soon as it came out. You got to do it as soon as possible. Invest in your TFSA as soon as possible. When you turn 18, that is the first thing you should do. Don't ask your parents for a car. And if you're a parent watching this, you have an 18-year-old, don't buy them a used car. Give them the example and fill out their TFSA. That is the most important thing. Can you imagine by filling out your TFSA at 18 what it could be worth in 20, 30, 40 years if you just invest in an index fund like the S&P 500 or the NASDAQ? Right? The TFSA is absolutely incredible. You could invest in Canadian listed ETFs that hold American stocks that have the S&P 500. You don't have to worry about tax implications at all, guys. So a reminder that if you invest in a Canadian listed S&P 500 ETF, like the one from Vanguard, VFV, like ZSP from BMO, doesn't matter which one, if it's listed on the Canadian stock market, you don't have to worry about withholding taxes, even though it's all American stocks inside. The withholding taxes are all managed within the ETF. You could invest in American stocks, which tend to outperform the American market, tends to outperform the Canadian market. But either way, the most important thing is to invest in the TFSA as early as possible and always make sure to max it out. Lesson number 4, you could get very lucky with your TFSA. So I've actually, I've done over 1,000 coaching sessions, guys, and I did come across someone who had a similar story. They got really lucky with the stock. It was actually Tesla, not Shopify, and they got their TFSA up to I can't remember the exact amount, but it was like 250, maybe $300,000. They sold Tesla, and now they have $300,000 of TFSA room. So yes, you could get very lucky, but the opposite is also true. Right, if you would have invested in cannabis stocks, for example, and then you sell them, then they're worth nothing, and you sell them in your TFSA, you lose, you destroy that TFSA room. You don't get it back when you sell. Right, if you invest, let's say you put 50 grand in a cannabis stock, that stock goes to 5,000, you lose $45,000, and you sell it. You don't get that $45,000 of room back in your TFSA. This is exactly what happened to a friend of ours. We'll just call him David. He invested in cannabis stocks in his TFSA, and they've all went down, and he lost a lot of TFSA room. So this is, although you could get lucky, you could also get very unlucky. My recommendation personally is don't go with single stocks. You gotta consider your TFSA room as sacred. You might as well go with broad-based index funds, either income or growth, doesn't matter, instead of stock picking. You'll definitely, you probably won't get to the same amount Marcus did, but over time you will grow and grow and grow that room as well. So that is just my opinion. Take the safe route. So yes, you could get lucky, you could get very, very unlucky, or you could just go in the middle and have a consistent, just buy the market. My recommendation always be, if you're 18 or whatever, go with a broad-based index fund like the S&P 500 or the NASDAQ 100. There are Canadian listed versions of both those indexes, in a growth form and in an income form as well. The next lesson is really the high understanding what kind of high income potential covered call ETFs could give you, right? This guy's making 11 grand a month, 14% yield, something like that. So even now, even though, I'm assuming he invested in, like the article says, broad-based covered call ETFs, S&P 500, NASDAQ, those ones there, they don't have 14% yields now, but they're because they've gone up, right? Remember, yields go down when the prices of something go up. So right now they're still giving between 12.5 to 13.5% yield, guys. So just proves the high and consistent income potential of these ETFs if income is what you're looking for. Obviously, my channel is all about income. So if you're interested in this style of investing in income, if you're new to this channel, make sure you subscribe, because that's my expertise. That's all I live and breathe, is income focused investing. And I cover all these funds. I interview the fund managers as well, so you know exactly what you're investing in. Another lesson we could learn from Marcus is he kind of has a hybrid approach, right? You saw he's leaving the growth stocks inside his RSP, and he'll do income in the TFSA. This is something that a lot of people do. You don't have to go full income, full growth. You could actually separate it or do a hybrid approach, a hybrid strategy, and use different accounts for different things. So he decided, I'm going to go all growth in my RSPs, income in the TFSA. So you guys could do the same thing. There's nothing wrong with a hybrid approach of doing a bit of income, a bit of growth, and using different accounts for those different strategies to make your life simple, right? So you could go with an S&P 500, NASDAQ 100 covered call ETF in your TFSAs if you want that tax-free income. That's important for you to generate that income. And if you want growth, you could still get a NASDAQ 100 S&P 500 index fund, growth style, and put that in the RSP. So you could take a hybrid approach. And the last lesson is knowledge is power, right? Where did he learn? I'm hoping it's my videos, obviously, but where did he learn about covered call ETFs? Did he learn it from his financial advisor at the bank? No, he went out, he did his own research, he searched on YouTube. The way his quotes are, I know he understands, and really took some time to figure his investing out, what's best for him. So knowledge is power. And once you have that knowledge, guys, once you know how to invest on your own, whether it's for growth, whether it's for income, whether it's for dividend, which I feel are the three investing styles out there. Once you understand all three, sorry, the power went out, but the generator kicked in. So once you understand all three, you have that knowledge. You always know what to do with money. I mean, it's incredible knowledge. There's so many people that get raises, they get bonuses, they get an inheritance, they sell a business, they sell real estate, they don't know what to do with the money. This is actually a primary reason why people book a one-on-one session with me, a coaching session. Knowledge is power. You'll never you always know what to do with money now. You could just invest it. It's always great to invest it, whether it's growth or income or dividend, doesn't matter. It's important to invest it. And the earlier you learn these skills, the better off you will be over time. So guys, I hope this video was informative for you. It was definitely fun making it. Very, very cool article. Again, Marcus, if you're watching, my friend, reach out to me. I would love to talk to you. Maybe we could do a testimonial video. And I understand you probably don't want praise or remain anonymous. We could do that, but just think on how your example could help others, right? This article, I'm sure, is inspiring and helping others. Well, if we do a testimonial, we could put a face to and discuss a little bit more in detail. Trust me, you will help others. That's the goal. So reach out to me if you're interested, my friend. But either way, congratulations. And I really hope it's my videos that you watched to learn about this stuff. It really makes me happy. So it makes me happy when people have a plan and they're figuring things out on their own and they're doing it themselves. And that's what makes me the most happy. So guys, hopefully this was informative. Give me a thumbs up. I would really appreciate it. If you see any crazy articles like this, send them my way if you want me to comment on them or review them. We're all here to learn. That's the whole point, right? And see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.